Hey, welcome back to an episode of Level Up with Lee. Today, we've got a terrific guest for you. We've got Bobby Henebry, Chief Investment Officer of a prominent family office. And today, we're going to talk all things crypto. So, Bobby, welcome to Level Up with Lee.
Well, Lee, it's great to be with you, and always fun to talk to a fellow Yellow Jacket and financial professional. And so I'm happy to nerd out on whatever y'all want here.
Okay. Good deal. Good deal. So listen, let's just jump right in. I've actually got a question here from one of our viewers, Mr. Kenneth A. from Atlanta. He simply wants to know, what the heck is crypto?
Yeah, that's a great place to start. And I'll kind of parse it out into a few different answers to help people kind of make sense of the different aspects of what crypto is, because there's a conflation of terms out there. But crypto, kind of the term comes from cryptography. And so cryptocurrencies, there's a cryptographic element and a history of a lot of different technologies and philosophies that come together in crypto. But cryptocurrency, as the name implies, is just a cryptographically encoded currency that's effectively decentralized as opposed to centralized. What does that mean? So dollars, US dollar, which is a fiat currency, it is centralized. There's a central bank that has rules about how much supply there should be. The value of the dollar is a function of what's happening in the local economy and the global economy. Well, cryptocurrencies came online and said, gosh, rather than having it a central authority, let's have it decentralized and rules that are distributed literally all around the globe. So that's kind of cryptocurrency broadly. The technology underneath it that allows you to have something distributed that's abstract, it's invisible. In cryptocurrency, you can't touch, right? It's not cold hard cash or gold.
Right.
Well, the technology under cryptocurrencies that allows you to transfer digital assets across a distributed network is called blockchain, right? So there's a bigger circle of blockchain protocols for transferring digital assets. There's a smaller subset of cryptocurrencies, which is everything that is crypto related that we'll kind of get into. And crypto works on blockchain protocol. And then within crypto, there's Bitcoin, which is the first and largest cryptocurrency. So it's really important when you hear people talking about this and see information on the news to understand, all right, are they talking about Bitcoin? Are they talking about crypto, the rest of the stuff there? Are they conflating those, or is it blockchain? Because there are certain applications of blockchain that are not currencies. So there's a little nuance to have that's really important to understand what crypto is and what crypto isn't.
Gotcha. Good deal. So help me understand, how did you get into the crypto space and become now this expert on all things crypto?
Well, I appreciate that, and call me an expert too. The more you dig into this, what's fascinating for a curious person is the more you learn, the more you realize you don't know about this space. I mean, there's so much going on. It's really fascinating and robust. But what drew me in initially, the first time I was introduced to Bitcoin was, I don't know, 2013 or 14 at a holiday party with some friends from high school. And one guy was a really big kind of libertarian, but within libertarianism on kind of not a Federal Reserve fan, not a central bank fan. So he was a huge Bitcoin fan. Again, not centralized, but decentralized. And I was in wealth management and really paying attention to monetary policy and equities and all this. And so we got into these ideological debates at a holiday party about, should there be a gold standard or not? And what is Bitcoin really? And so that was where I was introduced. And then a neighbor of mine was a Bitcoin miner, and I'd go over to his house, and he'd have all these machines humming, and I thought it was kind of weird, right? And he'd have to leave, my house and be like, oh, I got to go check on my fans, and like the mining rigs. And it's like, okay, well, that's different. And anyway, as I saw more people getting into it, I was then at a blockchain or at a conference in Cayman Islands, actually in 2016 with a business network, and they had a speaker on blockchain, and it was finally just a tipping point where I finally said, look, I want to get into this. Should I, buy some currency? How would I do that? Should I mine? Should I sell hardware? Are there other things to do? And so I invited that friend that I'd had those debates with initially, and I just picked his brain for a whole day on a Saturday. And I just said, all right, where should I go in the ecosystem? And I was just curious. And I finally said, I want to invest a little bit of money. And I came out in 2016 in the fall, thanks to my friend Ben, a really brilliant guy. And he helped me set up my first mining rig. It was when Ethereum was $8.50. I think it was $8.44 was my first Ethereum, that came in. And I was a miner, and then it took off. And as as it took off, I bought some more mining rigs. And then I remember you, Lee, specifically in 2017 around Thanksgiving, you called me and you said, Bobby, people are asking me about this Bitcoin thing. What's going on? And then I invited you over to my house to see the mining rigs. And I don't know, it's just interesting. And then I just went on this global journey from there. So that's how I got in, but it was really curiosity and conversation. And as I got into it and understood the ideologies in it and the technological aspects of it, it was just fascinating. And here I am.
Gotcha. All right, good deal. So you mentioned, your experience there and how it started and mining Ethereum. So we hear Bitcoin, we hear Ethereum, Dogecoin, scam coin. I don't know how many coins are out there now, but what are some of the differences between a Bitcoin and an Ethereum or a Litecoin or a Dogecoin? Just what makes the difference with all these coins? Why would we buy one over the other?
Yeah. So let's start with, again, those circles: blockchain, crypto, Bitcoin. So starting with Bitcoin, there's a white paper. Satoshi Nakamoto is the author of the Bitcoin white paper, which is a peer-to-peer cashless payment system, roughly is the title, in 2008. Well, if you think about what was happening in 2008, a great financial crisis and companies were failing, big institutions were failing. Central bank was injecting liquidity in the system. There was a big ideological debate about, hey, should you put this money in the system? Should you reward bad actors? Yes or no? Should you go back to the gold standard or the Austrian economists that are more kind of stringent in the rules and, you got to punish the bad actors and then move forward? All these philosophical debates were going on. And so Bitcoin was birthed from that dialogue where a group of people came together and said, hey, let's build something that's just like gold, because we're not going back to the gold standard because logistically that's almost impossible. But let's use, cryptography and the internet and programmable open source software groups from around the world. And let's build a digital currency that is outside of existing systems, that is fully distributed, because we think some of the central authorities are going to mess this up, right? So as a result, Bitcoin is 21 million Bitcoin can ever be mined, and they're divisible. It's not like buying a share of Apple, like you can only buy one share, right? A Bitcoin can be subdivided into Satoshis, which are 1/10,000,000th of a Bitcoin, right? So you can do smaller transactions like buy a latte or, buy a pack of gum at the market. And so it's got 21 million, and what Satoshi Nakamoto white paper outlined an entrepreneurial incentive for people to buy computers, CapEx, capital expenditure, and then use electricity to process transactions to release currency into circulation, a primary market transaction. And then the rigs also process secondary market transactions for people who democratically choose to participate in Bitcoin or not. So it's 21 million Bitcoin, and every 10 minutes, new Bitcoin is released or secondary market transactions are processed. I know that's super nerdy, and I appreciate everyone paying attention to all this still right now.
Gotcha.
But it was the first, but then people saw limitations in Bitcoin and they said, well, gosh, if transactions are every 10 minutes, well, I'm not going to wait at Starbucks for 10 minutes for my payment to be processed. But if I sent money to my cousin in China or the Czech Republic, sure, 10 minutes is way better than banking. So there were limitations to Bitcoin, and other people started taking that open source code, because this is fully public, global, distributed, and said, gosh, let's make other coins that have 2.5 minute transaction times. And Dogecoin came out of it. There were forks of Bitcoin where some people said, well, let's take it this direction. So like a stock split. So Bitcoin continued to be what it was, but there were offshoots that said they wanted to shift the code a bit and create something new entrepreneurially in a currency. And there was Litecoin as a fork. And then Dogecoin was a fork of that basically said, well, gosh, let's do 1 minute transaction times. And even though Bitcoin is fixed supply, well, inflation isn't necessarily inherently bad. And sometimes people lose coins or whatnot. So let's have a little inflation in it. So Dogecoin was created kind of in a way, they say it's a joke coin, but there was real technology as an offshoot of Bitcoin that it was birthed from. And it kind of became a tipping mechanism on Reddit to say, gosh, Lee, I like that article you posted, and that's great. So how about I tip you some Dogecoin? And it just became its own pocket of globally distributed currency. And last answer to your question there is Ethereum basically came out and said, gosh, Bitcoin's fascinating as a currency and all these other things are fascinating as currencies, but what if we have programmable currency that also has digital applications that can be put on top of these blockchains, right? So that you can automatically program that, if an insurance contract meets certain terms, that it automatically pays out to Lee, or there's certain aspects of legal contracts where payments flow under certain terms, or there's, all sorts of other things you could do. So let's think about what digital entrepreneurial companies we can plug into a protocol. And that's what Ethereum is. So it's a company, it's a platform, it's a kind of plug and play to build digital applications. And it was kind of outside of Bitcoin, it was this other slice of cryptocurrencies that are called platform coins that enables global distributed entrepreneurial interaction through this currency and company. It's fascinating.
Gotcha. You're absolutely correct. Fascinating is exactly the word I just had in my mind here. And this is totally fascinating. I'm thoroughly enjoying it. We're going to take a really quick break, and then we'll be right back with more Bobby Henebry in crypto.
Hey guys, what is a blockchain? 'Cause I don't know, and what is mining? Magic money machine, can I trust crypto? My head is spinning, please explain. Well, a blockchain has lots of nodes, what are they doing? Processing code, discover hashes to release currency and prove transactions block by block. This is called proof of work, not proof of stake. There is a big debate about who is right. No one actually knows who's right in this. Well, it kind of depends on who you ask. That's the debate. If you like politics, you would love this. I mean, it's fascinating. Lots of intense and strong opinions. Anyway, we digress. Google it. Now back to blockchain. Decentralization, that's trust. Cross-distributed networks like Uber and Airbnb. Outsourced assets globally. Let's try an analogy. Well, blockchain is like a road, and crypto is riding on top, but other digital assets can ride on that road as well globally. So pay attention to that distinction. Importantly, filter information. Good luck now. Hope you learned something from this. But I would understand if you're totally lost, so Google the words found in these lyrics. Knowledge is power. Thanks for listening to me and this serious and silly song. Thanks, guys. Okay, catch you later. Bye.
Oh, man, that was a fantastic clip, Bobby, with you playing there. Hey, tell our viewers a little bit about how that song came to be on Chord Savvy.
Yeah, well, you were overly generous in your praise, Lee, and I appreciate that. But I'm a huge fan of music. I played saxophone for 8 years as a kid, piano for 8 years as a kid, was in a ska band, and I picked up guitar as a teenager, and I played a lot at Georgia Tech and Under the Couch. And music is a wonderful kind of platform to kind of create and write songs and connect with people globally. I bring a little travel guitar with me all over the world when I travel to these leadership networks and other business trips. And so I was thinking of, this is the nerdy subject, right? And for those of you that are still paying attention, God bless you. Thank you for your attention. It's just hard to get into. So in any presentation, how do you make it fun? So I just started experimenting and saying, well, why don't I write a blockchain song and use it as a way of synthesizing what I've been learning in the place and throw it up on my YouTube channel, Chord Savvy, and just, see if one, that helps people learn, and two,
Gotcha.
just have a little fun with it.
Gotcha. It's interesting. You use the phrase platform, and earlier you were talking about Ethereum and how it's like a company and you can build things on it. But we've been hearing more and more lately about NFTs, non-fungible tokens, if I pronounce that correctly. Yep. And so as we look at art meeting cryptocurrency, if you will, tell us a little bit about how that works and how that can potentially play out.
Yeah. So first off, I've been doing a lot of research in NFTs, and a friend of mine sent me one recently to kind of like play with it. And so that's kind of my context for experience with it. But I've also been vetting a lot of NFT platforms. But let's kind of start back on platforms, right? So Ethereum is what I call a platform coin. It's a currency. It's a company. It's almost like a back office operation for you to plug and create a token what they call an ERC20 token. So there's a protocol for how tokens are created on top of the Ethereum machine, okay? And I think there's like 4,000 or so ERC tokens that have been created on top of Ethereum, and some of 10 or 20 of the top largest coins in cryptocurrency, if you go to coinmarketcap.com, they're actually tokens. So they're their own currency with their own rules or their own platform, but they're also plugged on top of Ethereum. To NFTs, what really got NFTs started was back in 2017. There was something called crypto kitties, okay? And there were these little kind of cute little gifs of these cats with gems on them or whatever like that. But that was a visual representation. But those images and information embedded in them were ERC20 tokens that were hashed or created on top of the Ethereum protocol. And by non-fungible, it means that each kitty or each token initially is a unit of one, right? The US dollar is fungible, right? If I give Lee $1, or if I give him $4 and he gives someone else one of those dollars, they're fungible, they're recognizable, that they're kind of interchangeable, right? That's what fungible is, kind of in the context of currencies. To be non-fungible would be, well, if I gave Lee one NFT, there is only one of those NFTs, okay? And so this crypto kitty, and I know that name sounds weird to people, but go back and research it. It was kind of an experiment, almost like, I mean, if you play video games like, I don't know, World of Warcraft or some of the video games you play on your phone, there's kind of unique, houses or armor or swords. So we do value things that are totally abstract and digital and in different ways in different ecosystems. And so NFTs have evolved to be kind of, well, what kind of digital ecosystems can you create that people can be a part of, right? Like think of Avatar the movie. Why is Avatar the movie so fascinating? It makes it because there's something about us that we value this. It's kind of this, you could have an avatar, an alternate reality, or you could have a real virtual system that is representative of something else, some ecosystem. The last thing, any comments on that, Lee, before I nerd out a little further?
No, you're good, man. This is golden.
So another thing to focus on, we as people, when we look at things, we have a simplifying heuristic of good, bad, 0, 1, black, white, red, blue, kind of politically, ideologically. We simplify things because we need to, right? If you really want to understand crypto, go back to even the 3 simplifications I had of Bitcoin, crypto, Ethereum. And inside of each of those, there's an infinite spectrum of gray, and there's so much nuance to what's going on, okay? And so I would challenge everyone to step back from trying to simplify things too much. Be comfortable with going into complexity. Be comfortable with holding competing ideas in your head simultaneously, which will allow you to understand the nuance of what's going on here and in any ecosystem around the world, okay?
Gotcha.
And there will be a lot of bad NFTs. They're just like there were cryptocurrencies that went bust. It's just like in the internet cycle, people are like, well, the internet bubble was huge and people lost a lot of money. Well, after the internet bubble crashed, did we just lose the internet? And no, it was a huge experiment that pulled in capital, resources, and all these things. And there were a lot of things that didn't work. There were also many things that did. Okay, so in NFTs, there's a lot of stuff that's not going to work. And there's some things that I think will continue to work. And we've evolved in the NFT ecosystem from kind of this, fun kind of like digital trading card with a crypto kitty to, these sports platforms, Autograph is the big one that Tom Brady and others are endorsing. And where it went from, we'll take a picture of Lee, who was an athlete in college. So what if we just took one of, Lee's pictures as an athlete and we hashed that? Lee could do that right now, right? You could create an NFT. But the question is then who's going to come and what value is there around that NFT? And the big athletes, just like you, Lee, have been doing this for a while. And then it evolved to, well, what about series like a baseball? Well, what if there's a single picture and it's a series of 100, right? So there are 100 NFTs, but each one is, issue 1, issue 2. And the first issue in an NFT series is always going to be more valuable, just like the first issue of a painting on the wall is more valuable, okay? Well, the next phase of the NFT ecosystem is there are a number of people that are building out. I'm a Delta Sky Miles guy. I'm from Atlanta. My dad worked at Delta 32 years. I know all the Sky Miles rules to be in the club, right? Because I traveled so much. Well, how do you use NFTs as an overlay to existing ecosystems or communities with super fans or preferred buyers? And there are different tiers of, 1 NFT or 20 NFTs or 1,000 NFTs, each of them with different tiers of rights. Okay, so you can have digital rights that are attached to an NFT that you, as the owner of that NFT that has those rights, can then trade those rights in a different ecosystem, whether it's membership at Delta or membership at the local country club or whatever. So people are now kind of securitizing or digitizing those rights. So there's a whole evolution from NFTs of individual kind of fun pictures and whatnot to, all right, celebrities with individual pictures or cards or photos to series to now how to use NFTs to enable communities with different rights. And that's going on, and it's fascinating.
Absolutely. So now you kind of went down this dynamic of sort of left, right, good, bad, up, down sort of thing. And there's still some debate amongst a lot of people that are all brilliant in their own right about whether or not this stuff is real. So you've got Jamie Dimon, you've got Elon Musk, and you see some of these things play out in the Twitterverse. And I won't even broach the subject of the metaverse, but maybe save that for a later show. How do you see this debate playing out about, hey, is this stuff really real and here to stay? Well,
let's start with something that we all directionally can agree on. Venture. How does a venture company start? Right. And the biggest example I could think of is, and any opinions of it, set aside for the moment, but Facebook Meta, right? Facebook started as an idea in a dorm room with a small community, and, some folks put effort into, and programming, and then Zuckerberg kind of took it a new direction. But early on, there was no real value. It was kind of, you're hoping people participate in this ecosystem, right? And then eventually it got capitalized and people invested in it. And then there was a revenue model that developed. I mean, that's basically every venture company. It starts off, there's no value other than the effort that people choose to put in it. And then people investing capital and bringing resources together. Okay. So there is a precedent for people that are willing to invest in something that doesn't exist. Okay. And if you go back to Bitcoin and crypto and blockchain, in that crypto sleeve of these circles I keep alluding to, I think of the balance of crypto outside of the currency coins, Bitcoin and Litecoin and Doge. The rest of that is really, they're all venture capital conversations. But the crypto is kind of like a liquid pricing. So it's almost like it's a liquid venture capital market where people who like ideas and choose to vote on them with their dollars or with their crypto are voting on the projects that they think would add value in whatever ecosystem they're involved in. Many of them will fail, just like many venture companies fail. Some of them will succeed. So it's really it's very nascent, and it's kind of discovering value and bringing resources together. Back to the kind of higher level point of kind of, the Jamie Dimon's opinions earlier on this, or central bank opinions and other players. Well, think about currency. Why does the dollar have value? And one of the most uncomfortable facts that many people struggle with is, the dollar is not backed by anything except the full faith and credit of the U.S. government. Faith. Okay. We got off the gold standard years ago. There's no physical asset or backing fiat. Central banks are very thoughtful as best they can on, deciding to increase or decrease the supply, but they literally create money like that, and they destroy it like that. Okay. Based on what they see happening in the ecosystem. Right. And so the people that kind of, poo-poo, Bitcoin has no fundamental value and what's the cash flow of it? Well, I would argue that most people have never actually asked themselves, what's the fundamental cash flow of the US dollar, right? We just believe in it. It is faith. Okay. And that's really uncomfortable. I remember the first time I learned that in an economics class, it was like, what about cold hard cash? What about, so we all, from the time we were born in America, we believe in the dollar. And at the same time, the cost of a Coke when you were a kid and Coke when I was a kid versus Coke for kids now are totally different because the value of the dollar has eroded over time. Right. So there are many debates embedded in what I just shared. And so what's happening at a high level are institutions are debating about is Bitcoin valuable or not? Some people believe it is and some people don't, and some people are on the fence. Well, the people that believe in it have created and continue to invest in this ecosystem as kind of a hedge against the dollar or other currencies. And so I don't think it's, Bitcoin's going to replace the dollar and it's one or the other. I think there's space in a global conversation around what Bitcoin represents. And all of that is being debated right now, just like we debate what our democracy should look like.
Gotcha.
Cryptocurrency is a fully global, decentralized. It is the global democratization of money without being issued in some arbitrary borders that are results of peoples and populations arguing and fighting and creating those borders over time.
Gotcha. That brings up an interesting point. So you've mentioned the fact that, hey, this thing is global. And frequently we sort of get bogged down into what's going on here in America, but can you speak to perhaps the let's call it the global opportunity set, if you will, in the world of crypto?
Yeah, so many in this conversation here are probably Americans watching this. At the same time, I'm optimistic, Lee, that you're going to go global at some point.
Worldwide, baby, going worldwide.
Because you're awesome. And so, but if you step back, the US is 330 million people roughly. And the world population is 7.9 billion people. So we in America are only, 4.2% of the global population. It's kind of like saying that there are 96% of people who have different perspectives and experiences than us as Americans. Okay. This goes back to that it is or it isn't. It's kind of, all right, how do you look at the infinite gray, the spectrum of political thought, ideological thought around the world? Okay. And so, I've traveled to 55 countries. I've spoken 80 or 90 times in 20 countries on crypto, many in person, but more virtual in COVID land. And, as I've talked to people, for example, I have friends in Lebanon. 2 years ago, there was this horrible blast in Beirut. Before that blast, they've been in economic challenges. Their currency was devalued 80%. You go to Uzbekistan, which is over 30 million, 35 million people. Their regime changed a number of years ago, moved to, the currency was off 50% overnight, right? You look at hyperinflation issues in Zimbabwe, in Venezuela, and other places. Okay, that's the nuance of the conversation. We as Americans look at Bitcoin and say it's super volatile, but other people would look at it and say, well, Bitcoin is actually less volatile than our country's currency. And so when you see that nuance, you see we're on a spectrum of rule of law matters, developed countries, fairly stable, not perfectly stable, and then all the way to central authorities who are not acting in the interest of the people. And then the spectrum between, there's a range of conversations, both for blockchain protocols and digital rights and assets and currency protocols. And how do you have something that's competing against it so it's more in the interest of the population? And that ideology, that philosophy, that political discussion is an underpinning of faith and necessity that then filters up into what these currencies are.
Gotcha.
And it's a much richer debate globally.
Gotcha. Now, you brought up a good point that has flummoxed me for a while, and that was touching on the volatility. So we've got a dollar, and we know that a dollar today is a dollar tomorrow. Now, we might not be able to get as much with that dollar tomorrow as we buy today. But with Bitcoin, it seems like in the last 12 months, it went from, around 30,000 up to about 60. And then June, it was back down to 30, and I think ran up to 60 again and back down to 30. And, perhaps as we're taping the show today, maybe it's around 42, 43. Why is Bitcoin specifically, and it seems cryptocurrencies in general, so volatile, and we have such high highs and low lows really quickly?
Yeah, well, no, those are really good questions. And that's, this is nascent. It's early still. Bitcoin's, the white paper started in 2008. The first trade was in 2009. And, but a lot of people, we as people, there's a strong recency bias, kind of, if you go into behavioral finance, we pay attention to what happened in the last day or a few months, and we assume that's everything, right? Whereas, the other side of it is, Bitcoin was $1,000 and, January 1st of 2017, plus or minus, right? It was around $1,000. Well, from 1,000 to 40,000, that's a 40x return. Now there's a lot of volatility there, but you're a financial planner, and part of the challenge in equities aren't perfectly compounding in a smooth line of 8% a year or 10% a year, whatever it is. There's huge volatility there. So it's time in the market that is more important than timing the market in equities. I believe the same for people who are going at it through an investment lens in Bitcoin. It's time in the market. If you can't hold this thing for 5 years, I'm not an advocate of trading, and I don't know everyone's personal situation, but
Sure.
Yeah, I think if you believe in this thing, you got to hold long term. But part of the volatility is, there's a function of, well, central banks put in, the top 4 central banks put $7-8 trillion in the economy, just created $7 or $8 trillion of money, created it in 2020 to combat COVID. They just created it. And then there's a tranche of Bitcoin people who are like, all right, inflation's going to come. I'm going to buy Bitcoin as a portable store of value instead of gold. And so they bought it. And those that bought it in 2020 have been rewarded for holding it even though there's volatility, they're holding it for an inflation hedge. There is also a huge tranche of people who just trade in it and they create volatility. That's not personally what I do in it. And I think there will be volatility for a while. That's why I say if you're going to go in, you need to have a long view. But there's also the whole global adoption conversation that I alluded to earlier, where there are certain countries that are trying to implement Bitcoin or payment processing capabilities. And over time, as there's more adoption, there will be more kind of value in it. But that's different from, go back to the Facebook example. Facebook has venture capital, like it's a private market. You don't see the price volatility that is the reality of how crazy a startup is, right?
Right.
So these digital ecosystems, Bitcoin or platform coins like Ethereum or Cardano or Solana or these others, the crypto market creates a real-time pricing of the emotions of and synthesizing. So if you're more believing in efficient markets, there's more efficient pricing, not perfect, of the volatility of what's happening in the currencies, right? So there's a lot. And then, then people say, well, regulators are going to come in and kill it. And China bans it, which in a way validates it, in my opinion. So if a huge central authority is banning something that's fully decentralized, it's kind of like validating that it has value, okay? But not everybody believes that. So there's all this nuance of opinion that is either supporting it or not, and it goes through cycles based on what's happening in the economy or what's happening in the local ecosystem of each coin.
Gotcha. Good deal. So you bring up another interesting thing with this volatility and coming at it from a chief investment officer perspective or that of a financial planner or wealth manager. You got these more traditional portfolios with things in it like Facebook and Amazon and that sort of thing. But if you're saying, hey, listen, I want to add some crypto to the kitty, no pun intended. Do you have any thoughts on how much crypto should be a part of an overall portfolio, or what's your thinking behind how much crypto needs to go into a portfolio?
Well, it's a great question, but you got to start with what is willingness to take risk and capacity to take risk for individuals, right? Willingness is, hey, are you willing to go, I don't know, bungee jumping? Yes or no? Are you willing to put a little bit of money on a bet or a lot of money on a bet on blackjack or something like, that's kind of a willingness conversation.
Right.
Capacity is, all right, if you're 20 and you're investing in crypto, and if you're 70 and investing in crypto, well, the 20-year-old has way more capacity to take the risk because there's a lot more time to make up for any losses and compounding, right? And so, I share that, which I know you understand, Lee. At the same time, for the audience, it's you got to talk with yourself about, all right, what is my willingness to take risk and what is my capacity to take risk? And that'll then inform, all right, how much you want to put at risk in crypto, and then what investments within crypto broadly. And so, I think for the average person, and I don't know your situation, so I can't advise you. I think you got to start with a number that you're willing to lose, right? So if you're not willing to lose this capital, which is a test of willingness to take risk, you shouldn't be in this ecosystem, because it is volatile, and there are a lot of ways you can lose significant, if not all, of your capital that's invested in crypto. So, I mean, it's kind of like a 1% of your portfolio conversation for those folks. For
Gotcha.
others that are doing venture bets, however you size your venture bets, if you're the kind of person that's got 5% or 20% of your portfolio in venture capital and super risky bets, well, then that gives you more capacity, but still is a smaller portion of it. And then, once you decide, then there's the whole conversation of dollar cost averaging in. Again, there's no obligation to do this. This is not for everyone, but if you're willing to put $100 at play, then put $25 in and then wait 3 months. and then put another, because you can't time it perfectly. It's so hard.
Right.
If you're going to be in this ecosystem, I think you got to have a very long view if you choose to be in this ecosystem based on your own situation.
Gotcha. Thanks, man. That's been an incredibly informative show. Every time I talk to you, I feel like I'm getting smarter, and hopefully my viewers are having the same thing. So let me ask you one last question as we wrap up the show. Now, you mentioned going to more than 50 countries and talking about crypto in more than 20 different countries. But I got to ask this question. As you traveled literally around the globe, what's been your favorite bourbon from any country in the world as you've been traveling?
That's a great question. Well, the first thing that comes to mind is actually in Armenia, they have a cognac called Ararat. Now, they don't call it cognac because cognac, there's a trademark around that, and it goes back to like a European World Fair like 100 years ago. But the Armenians specialized in this Ararat cognac, Ararat after the Mount Ararat that I believe Noah landed on many years ago. And so I'm a big fan of Ararat. It's such a neat beverage, and if you have a chance to try it out, if you're of age and you're into that, then check it out. And I mean, there's also, I'll take it a little further, Georgian wine is fabulous as well. And the more you travel, it's neat seeing the rituals and traditions that people have in their culture and food and community that comes about from gathering around those rituals.
Absolutely, man. So, Bobby, this has just been absolutely fantastic having you on the show, learning more about crypto and the universe, how we can apply it to our portfolios, and a little libation from Mount Ararat. So thank you for coming on the show with us. We enjoyed it. We'll make sure folk can get in contact with you later on. But until next time, this has been Level Up with Lee and our fantastic guest, Bobby Henebry.